Let's chat about the South African market first. Growth in ETFs in South Africa. How have they lived up to your expectations since you first launched ETF products on the JSE?
So, compared to other global markets in Europe, the pace hasn't been the same, but it has been a steadily growing market over the years.
So let's take a look at what you have seen, and what kind of divergence is evident at this stage.
In terms of the trends we're seeing in Europe over the last sort of 18 months has been that the first 3 quarters of 2010, emerging markets were definitely flavor of the month, and we saw strong inflows into emerging market ETFs, especially those on equities, and they were far and above greater than those going into developed markets. Then from the 4th quarter last year, we saw a switching out of emerging markets into developed markets. We saw that where people were switching out of emerging markets, they were typically taking a broad exposure, and they were now taking this exposure on a single country basis. We also saw that in 2010, especially up to the 3rd quarter, gold was very popular. We saw strong inflows into gold exchange traded products, but that has tailed off, and we've actually seen outflows out of gold in the 1st quarter of 2011, although we have seen inflows into other precious metals such as silver.
In South Africa, where do you see the growth coming from at this stage? Is it the retail or the institutional investor where the demand really is?
Demand should come from both areas. What we're seeing in Europe is that institutional investors are adopting the use of ETFs more and more in their portfolios as they recognize the benefits that they can bring in terms of diversification, bringing down the costs of their portfolio. And we're seeing this filter into the retail market in Europe as well. And what we're seeing is that rather than retail buying directly ETFs, they are buying it through packaged solutions, packaged products. So we see more and more boutiques offering fund of ETF solutions. So basically asset allocation using ETFs. Somebody is determining what kind of markets or asset classes they should get exposure to depending on their risk return profile.
Does that affect then the ease at which investors can actually enter this market? Because we know that a question has surrounded just how liquid the ETF market is in the first place.
The ETF market is very liquid. Investors can access it as easy as buying any other listed security. In fact, over the last few days, we've seen that with the market volatility, ETF volumes have increased considerably, and we've seen that people are either taking profits on existing ETFs positions, or they're in fact using ETFs to get back into the market, taking the tactical view that markets have fallen, and I want to get back and use ETFs to get that exposure.
Manooj, there's been much talk about South Africans diversifying offshore at this stage, particularly with the rand as strong as it has been recently. What sort of exposure can you get through perhaps the Deutsche ETFs to global markets?
Currently on the JSE, Deutsche Bank has a number of international ETFs listed. You can get exposure to MSCI World, which is global developed market exposure. You can also get exposure to the UK, the FTSE 100, the Eurostoxx 50, which is the Eurozone, as well as to Japan and the USA market, USA.
Taking a look at the product pool here in South Africa, are you looking at widening that pool moving forward?
Based on what we've seen on the trends in Europe, which is a few years advanced compared to South Africa, we'll definitely see a more and more variety of products coming into the market. What we saw in Europe was that initially the products were focused on equities. We then saw move into fixed income, commodities, and you now even have ETFs on things like hedge fund indices and credit indices, currency indices in Europe now.
How about the performance of some of these ETFs, particularly the ones traded on the JSE? How have they performed relative to the market?
Sorry, can you repeat that question?
Performance of some of your ETFs on the JSE relative to the market?
I think I don't have the specific performances at hand, but obviously markets such as the US and some of the developed markets have done well, so the performance of the ETF would have been in line with those.